Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. Today we are taking a close look at an expert advisor called Pendulum Grid Hedge. This is a pure grid hedging strategy, and one of the most interesting things about it is that it uses no indicators at all. There are no moving averages, no oscillators, no pattern recognition. Everything is driven purely by price moving against a fixed ladder of horizontal levels. By the end of this video, you will understand exactly how it enters trades, how it hedges long and short exposure at the same time, how it manages risk, and how to tune every single parameter. Let's get started. Let's start with the big picture. Pendulum Grid Hedge belongs to a family of strategies known as recovery grids. Unlike most expert advisors, it does not consult a single technical indicator. There is no relative strength index, no moving average, no average true range. Instead, the entire system is built around one simple idea. Price tends to swing back and forth, like a pendulum, around a central value. Here is how it frames the market. Whenever the account is flat for this strategy, it records the current price as an anchor. Think of the anchor as the center of gravity for the grid. Around that anchor, the strategy lays out a symmetric ladder of horizontal levels, each one spaced a fixed number of points apart. The levels below the anchor form a buying zone, and the levels above it form a selling zone. The strategy then fades every move. When price drops down through a level below the anchor, it buys, expecting a bounce back toward the center. When price climbs up through a level above the anchor, it sells, expecting a drop back toward the center. Because price often oscillates inside a range, the system can hold buy positions below and sell positions above at the very same time. That simultaneous long and short exposure is what makes it a genuine hedge. The opposing positions net out a large part of the directional risk, while each individual leg tries to harvest the small swings between grid lines. Who is this style of system suited for? Educationally speaking, it is designed for traders who want to study mean reversion behavior in quiet, range-bound markets. Its natural habitat is a liquid foreign exchange major such as the euro against the dollar on the 15-minute chart. This is for learning purposes only, and it is not a recommendation or a promise of any particular outcome. Now let's walk through the exact logic, step by step. When the strategy has no open positions, it treats the account as flat and records the current mid-price as the anchor. That anchor becomes the center of the grid, and the strategy clears its memory of any previous levels. From that anchor, it imagines a ladder. Below the anchor sit the buy levels, one grid step apart, 2 grid steps apart, and so on, up to the maximum number of levels you allow. Above the anchor sit the mirror image sell levels. Here is the entry logic. For a long trade, the strategy detects when price crosses downward through one of the levels below the anchor. The moment the previous price was above that level and the current price has fallen to or below it, the strategy signals a buy. It is buying the dip, expecting price to pendulum back up toward the anchor. For a short trade, the rule is the exact mirror image. When price crosses upward through a level above the anchor, the strategy signals a sell, fading the rally. Every single leg is protected on both sides. The take profit is placed a small number of grid steps toward the anchor. A buy targets a level above its entry, and a sell targets a level below. That way each leg cashes out as price oscillates back and forth. The stop loss is placed many grid steps in the wrong direction, acting as a catastrophic safety net so that no single runaway leg can live forever. On top of the individual legs sits a basket money management layer. The strategy continuously adds up the floating profit and loss of every open position. If that total floating profit reaches the basket take profit target, the strategy closes everything at once, banks the net result, and re-anchors a fresh grid. If instead the floating loss reaches the basket stop loss limit, it flattens the entire basket. That basket stop is the hard ceiling on grid risk, because grids are most dangerous in strong one-way trends, and this cap is what prevents an unlimited loss. There is also a spread guard that skips brand new entries when the spread is wider than your chosen limit. Let's bring this to life on the chart. Notice there is no oscillator panel at the bottom, because this strategy uses no indicators. Instead, the gold dashed line in the middle is the anchor, the green dashed lines below it are the buy levels, and the red dashed lines above it are the sell levels. This ladder is the entire engine. Watch the first few candles. Price opens right around the anchor at 1.0850, then begins to slide lower. On the third candle, price falls and crosses down through the first buy level at 1.0830. This is the moment the strategy signals a long trade. It is buying the dip, expecting the pendulum to swing back toward the anchor. You can see the buy entry marker appear right there. Now follow the bounce. Over the next 2 candles, price recovers and climbs back up. The take profit for that buy was placed 1 grid step toward the anchor at 1.0850. On the 6th candle, price reaches that level, and the long position closes for a small gain at the take profit marker. But price keeps rising. On the 8th candle, it crosses upward through the first sell level at 1.0870. This triggers the mirror image rule. The strategy signals a short trade, fading the rally and expecting price to fall back toward the center. The sell entry marker appears. Finally, watch the move reverse one more time. Price rolls over and drops back down. The sell take profit was placed 1 grid step below the entry, back at the anchor of 1.0850. On the 11th candle, price reaches it, and the short position closes at the take profit marker. 2 trades, 1 long and 1 short, both fading the move and both targeting the anchor. That is the pendulum in action, and it is shown here purely for educational illustration. Let's go through each setting so you know exactly what you are adjusting. GridStepPoints, defaulting to 200, controls the spacing between adjacent grid lines. Wider spacing means fewer but larger trades, while tighter spacing means more frequent, smaller trades. MaxLevels, defaulting to 6, caps how many legs the strategy can hold on each side, which directly limits your total exposure. TP steps, defaulting to 1, sets how far each leg's take profit sits toward the anchor, measured in grid steps. Keeping it at 1 harvests the smallest oscillation. Stop grid steps, defaulting to 12, sets the catastrophic stop-loss distance the wrong way. It is deliberately far, so normal noise does not hit it, but it still prevents a single leg from running forever. Lot multiplier, defaulting to 1.0, scales the volume of deeper legs. Left at 1, you get a flat, non-martingale grid, which is the more conservative choice. Raising it makes deeper levels larger, which increases risk quickly, so handle it with great care. BasketSlMoney and BasketSlMoney are the heart of the safety layer. The first, defaulting to 30, closes the entire basket once total floating profit reaches that amount in your account currency, then re-anchors. The second, defaulting to 500, flattens everything once floating loss reaches that limit. This is your hard risk ceiling, and it should reflect what you can genuinely tolerate on your account size. Max spread points, defaulting to 50, blocks new entries when the spread is too wide. Set it to 0 to disable the guard. Lots, defaulting to 0.01, is your base trade size. And Magic, defaulting to 5,201, is the unique identifier that lets this strategy manage only its own trades. Always test changes carefully before considering any live use. So that brings us to the end of our look at Pendulum Grid Hedge. We covered how it sets an anchor and builds a symmetric ladder of levels, how it buys dips below and sells rallies above to hold a genuine hedge, how each leg uses a fixed take profit and a catastrophic stop, and how the basket money management layer banks profit or caps total loss. We also walked through every parameter and how to study it in the strategy tester. Remember, everything here is educational content only, and nothing in this video is financial advice. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the EA you would like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.